During an earnings season where most growth stocks just can't deliver the goods that warrant Wall Street's respect, and they've just gotten smacked down, as you've seen with a lot of growth stocks, Snowflake is just one of those few amazing growth companies that can just put up such monstrous results that the stock ripped higher after they reported their third quarter 21 results. After hours, the stock's up about 16%. And I want to do a follow-up video on Snowflake here because I'd argue it is an exceptional company. Their financials are in a league of their own. And so let's dive right in to understand, a quick recap of what do they do, and also just a thought process on the current valuation, which by most companies I'd say is just mind-blowing. But for Snowflake, with their financials in a league of their own, it might be worth reassessing. If this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did not own stock in Snowflake. And so the premise of Snowflake's business model is that they help companies store their data on one platform where it's easy to access and analyze it, easy to access and analyze the company's data. They're cloud agnostic and even compete with the data warehouse solutions of the leading cloud players, such as AWS Redshift, Azure's Synapse, and Google's BigQuery. So they're using the same cloud vendors, AWS, Azure, and Google, for their end customers, but they're applying their own software solutions such as a data warehouse and data applications. And despite these sizable competitors, Snowflake is posting incredible results, 110% revenue growth, net revenue retention over 170%. Amazingly, you need to take a step back and understand this. 170% net revenue retention, that means you're assuming no new customers, your prior cohort of business grew 70%. That is just mind-blowingly good. That factors in churn, that factors in everything. And then you see 110% revenue growth. That is just fantastic. So both of these metrics, even though they're already incredible, already best of breed, are actually an acceleration from earlier in this year for this business. So just mind-blowing. Yes, it'll definitely get Wall Street's interest, because whenever you see growth acceleration, it sort of destroys a business model, because then you can say, well, how long is this business going to keep accelerating for? Usually you hit some sort of, law of large numbers and growth decelerates. The reality is Snowflake is so early on that there's a possibility that they can maintain or even accelerate from here. And that's where folks are really salivating looking at this business. I look at this and I think these are among the best metrics I've ever seen with any company. And they're also, not only growing the top line, but they're also obviously growing their customer base. Their total customers up over 50%. Their large enterprise customers that are spending over $1 million on their products are up 128% year over year. Now, part of what makes Snowflake so sticky, so valuable, beyond handling a company's core data, is the direct data integration between hundreds of companies. They call this their data marketplace. In my opinion, this level of data sharing is a game changer for the cutting edge industries that learn to embrace it. And there are lots of different data sets that companies can integrate with their operations, and can be completely different data sets. For example, they call out how, different verticals can benefit from very different data sets. Financial service companies can benefit from the marketplace of data that includes, let's say, demographic or mobility and weather information. The prior slide, I was talking about, you could see data sets of like mobile app providers, so you can get that level of information. This marketplace grew 41% in the third quarter with 900 data sets from 200 providers. This marketplace will likely benefit from a very strong network effect, because folks start saying, wait a second, I can upload it here and this is where the demand's going to be. This could be something that really sets Snowflake apart in the years ahead, despite having, I'd argue, really tough competition in the forms of the core, cloud vendors like AWS. Now, not only is Snowflake, SNOW stock, growing at hyper speed, their gross margin structure is also improving significantly, and management expects to be free cash flow positive by this year, which is really, I'd say this is part of what sets a lot of growth stocks apart, is seeing that, free cash flow, knowing that this business could be self-financing in the years ahead. For a lot of other businesses that say, hey, yeah, maybe someday in the future then you do have the concern of, well, what's the dilution, what's the cash burn, and will they need to do an additional equity raise in the future? Here, what you're really looking at is dilution from the employee base, stock-based compensation, not looking at a business that's going to need to do another equity raise given that they're free cash flow positive. So what about the valuation as we look at Snowflake, SNOW stock? First, a quick plug, where if you're interested in following along with my personal financial journey, go to unrivaledinvesting.com, where each month I call out potential multi-baggers as well as my personal portfolio. We also have an exclusive community dedicated to learning and trying to find exceptional companies on Discord. So once again, if you're interested, go to unrivaledinvesting.com, click join the journey. If you enjoyed learning about potentially unrivaled businesses, potentially exceptional stocks, please make a point of hitting that subscribe button and hit that like button. So as I think about Snowflake's valuation, SNOW, Snow, look, this is an amazing business that is likely redefining how data will be used and shared in the years ahead. They have among the best metrics I've seen. The biggest challenge investors face is Snowflake's valuation. Now, sure, look, they're growing over 100%, and that is worthy of a lot of respect. But they also trade at over 100 times sales. Nearly all companies I look at, if they traded at 100 times sales, I'd just say, yeah, your risk profile is just terrible. You're probably going to have terrible returns in the future. With Snow, it's actually really tough. And look, as usual, it's really tough to say, yeah, you're going to have a terrible return because they're growing so fast and the business is so sticky. As I mentioned earlier, 70% growth just from their existing cohort of customers. That part of the reason why they're growing so fast is because you have that growth of their existing cohorts. Then you layer on the hyper growth with their the new customers that they're able to get. So it's really tough to actually say, yeah, this is definitely going to be a terrible return given this profile. Now, look, as usual, it all depends on execution and sentiment. Those are the two key aspects here. Execution is a key aspect, and whatever I pencil out, look, stock prices can go way higher and way lower, but I think it's important to use a rational framework in which to think about. If management can deliver, let's say, on 75% annualized growth, for, let's say, the next 5 years. So 75% growth, I'd say, is the floor that you'd need to deliver on over the next 5 years. Then I think shareholders could have a great return. The challenge is, will they? Will they continue to have that, hyper growth in the years ahead? And it's not going to be easy. I mean, just for context, if you pencil out something like that, that implies that the company grows. If you say 80% annualized growth, that effectively says, yeah, I think this company is going to grow by 20x, nearly 20x. In the next 5 years. That's amazing, taking a company from $1 billion in revenue to around $20 billion in revenue. So that's going to be the challenge is, will they be up for doing that? Will the competition react? That's a really tough call for me. I'd rather personally look for easier plays. That said, I definitely can understand why, shareholders might be saying like, hey, this is just the best metrics I can find. Why not buy it? And arguably based on back of the envelope valuation, saying, hey, 70 to 80% growth over the next 5 years, that's annualized growth, maybe an N multiple somewhere between 40 and 60 times earnings 5 years from now. Let's say 30 to 35% long-term margins because they're looking around 70% gross margins. So I'm looking at this and saying, yeah, if they're able to deliver on this, that's a big if, then maybe you're playing for 100 to 200% upside. That depends, once again, on that execution. If they don't, then I think this whole thing gets scrapped. The low side, you can completely blow through it, because if you aren't delivering that level of just hyper growth, then I think folks will assign just a much, much lower valuation. And that's really the challenge here. And that's a tough call for me. I'd rather just look for easier plays. For example, my most recent potential multi-bagger that I called out exclusively to my Journey subscribers trades at 1/5 the valuation of Snowflake, but is growing faster. And so that's, I prefer that type of risk reward. It's, I think it's a company that has, over 600% upside potential over the next 5 years, but we'll see. It all depends. Like all companies, it depends on the execution. If this video talking about Snowflake, the risk reward, their third quarter results has been helpful for you, please make a point of hitting that thumbs up and hit that subscribe button. Thanks so much for tuning in.